If you've been investing in the stock market for a little bit and you don't think you're a beginner, but you don't think you're a pro yet, and you fall somewhere in the middle and you're ready for some individual stocks, this is the video for you. And if you're sitting there saying, but I'm still a beginner investor, what about me? Don't worry, I've got tons of playlists right here on TikTok. But today I want to talk to the people who are ready to get some individual stocks in their portfolio. But some content creators here on this platform say individual stocks are a complete waste of time for most retail investors. And that might be true. Even Warren Buffett and some other billionaire investors say, just stick to the ETFs, it's easier, it's fine. And for many, and for most, it probably is. Most investors opt for something called the three-fund approach, which starts with one S&P 500 index fund. Now, most financial advisors say that an S&P 500 index fund should make up around 50% of your portfolio. And then you might also opt to have a technology-based ETF. You can see this one's up 467% in the last decade, and most financial advisors recommend that this could be around 30% of your portfolio. And finally, a dividend-based ETF. Now again, depending on your age, your goals, your risk tolerance, this could be 20% of your portfolio, or maybe a little bit higher if you were older or wanted more passive income. And something like this is up 112% in the last decade. But if you want some individual stocks, let's go to that next level. How do you start? As a self-taught investor and stock trader, I've been investing for over 20 years, trading stocks for 14 years. The way I find stocks to buy are I look at what companies I use. This doesn't always work, it's not foolproof, but it is a great starting point to then go and do your own research. The risk of buying individual stocks is that you're buying solo companies. And if that company doesn't perform well, then you might sit there going, oh, why did I buy this when I should have bought that? Which is the purpose of having the foundation first, so S&P, tech, dividend, and then if you choose to buy some stocks, a diversified stock portfolio. Or if you opt to only buy one or two individual stocks in your portfolio, you keep it pretty low in comparison to how much you have in the ETFs. That way you're limiting your risk. You're not 90% in one individual company and then you got an ETF, but it's not really your focus. In 2003, when I graduated high school, my mom got me an Apple laptop as a graduation gift. And I looked around and all my friends were getting similar gifts. The iPod had just come out. iTunes was just a thing. This was a long ass time ago. And people were getting gift cards from aunts and uncles. And here's a $50 iTunes gift card. And I was clocking it. I was like, damn, everyone's getting Apple products. I should invest. Going back even further, all the way back to 1999, I was a humongous professional wrestling fan, still am today. But when WWE, then WWF, announced that they were going public, it was a no-brainer for me. I gotta get stock in the thing that I love. And I did. Except back then, you had to get on your phone with your mom's stockbroker and say like, oh, I want some stock in a wrestling company. And he was like, what, wrestling? Are you serious? You know it's fake. A lot of these finance content creators who say, don't waste your time with individual stocks, they're unnecessarily complicating things. For example, I go to Kava. I've been eating at Kava since 2012. When they announced they were going public, it was a no-brainer for me. When I first signed up for a Netflix account years ago, it was a no-brainer to me. I liked this company. I watched their DVDs at the time. I should invest in the company. A few years ago, I was reading all these articles about smart technology and how it was going to become more prevalent and we were going to need more semiconductors and more GPUs to run this technology. And I started doing some research. And I found NVIDIA. Oh, people are always like, oh, I never finish a thing of lip balm. I always lose my chapstick before I have the chance to run out. Well, not me. I'm almost out. My girlfriend uses this, e.l.f. And when packages started arriving in the mail from this company, I started researching. If it's good enough for her, I might invest. And after doing some research, I decided, yes, I do want to invest in this company. This is just the starting point. Just because you love a company doesn't mean you run out and buy shares. And you don't also just limit yourself to companies that you use. It's just, like I said, it's just that starting point. It makes you start thinking like an investor. Now you're out and about and you see a garbage truck drive by and it's waste management. You go, oh, I wonder if I can invest in that company. Or you see a Rivian truck pull up nearby and you go, Rivian, I don't have a Rivian, but the truck looks neat. Maybe I should look into that stock. Maybe after doing your research, you decide, oh, this company is fundamentally really, really strong. I'm going to make an investment. Or alternatively, you say, I did the research. I don't think this company is fundamentally strong, but I still think it's interesting as a small speculative investment. So maybe a couple percent, 5% of your portfolio goes into the thing that's high risk. Maybe it's even less. Maybe it's 1% of your portfolio if you think it's really, really high risk, but still sounds interesting. But how do you research these stocks? You know, the first question that I get from new investors is, I don't know any companies. Well, sure you do. Sure you do. You know plenty of companies. You know plenty of companies. You know plenty of companies. You know this company too, don't you? And this one. Look right here. Johnson & Johnson. Hello? I know a lot of companies. Oh yeah, like this one too. The way some of these dumbass content creators make individual companies sound so unique and impossible. How does one go about finding a company to invest in? I can't think of any. Some multinational conglomerate? Whatever could that be? The point is, you know a lot of companies. Now, how do you research them to determine whether they're right for you or not? Again, it's really, really easy. I have a template on my website I'm going to show you right now. Here's the catch. It's totally free. Most content creators say, I'm here to help, I want to help you. But they're really here to get rich off of you. Not me. My templates are all free. Take a look. All you got to do is go right here, click on the menu, which is right here, and all of this stuff is free, including my course, which is actually free. There's no email, there's no PayPal, there's no Patreon, there's no sign up. What you're really here for is the fundamental analysis template. Now, there are some walkthrough videos if you're thinking, I don't know how to fill this out, but this is essentially what it looks like. And if you click right here, it becomes fillable. Hello. So you can fill everything in yourself. It's really easy to do. And even at the bottom of the template, there are some videos that walk you through how to do it. You also want to read what the analysts have to say about a particular stock. If you don't know where to find analyst reports, go on your brokerage. I'm using Charles Schwab, and just go right over here to where it says ratings and reports. And you can click on any one of these reports and read them and see what the analysts have to say. Now look, I know a lot of people hate the analysts. They say the analysts are full of shit and they're lying and they're manipulating things. Read the report anyway. And don't just look for confirmation bias. If you like a company, don't only read the good ones. Read the bad ones too. Become well-rounded. Maybe you disagree. That's fine. I also love websites like Stock Target Advisor. This website will show you what the analyst's average price target is on the stock. And if you go all the way to the other side of the screen, they show you what to like about a company and what not to like about a company. If you are a beginner investor and you watched this video, you're in big trouble. This video wasn't for you. It was for intermediate investors. I'm only kidding. Everyone can watch this video. Smash that follow if you want to learn more. Thanks for watching. See you later.